with Roy Cocciollo, broker owner of YourMortgageYourWay.ca for this week's Mortgage Minute. Hi, Roy.
It's always great to see you. This is like the fourth time in a row. I can't believe it. It's great. I'm so happy you're here.
Wow, okay. Well, let's talk pre-construction condos now.
Okay.
So when buying one, what are some of the steps needed to get the financing that's required?
Well, the funny thing is most people buy these pre-construction condos and they might not be built for the next 4, 5, or even 6 years, depending on the size of the project. And what people have to realize is now all builders want them to get a pre-approval from a major banking institution with a rate guarantee for at least 12 months. So the best and easiest way to do something like that is typically a builder has somebody on site, whether it be a Royal Bank, a Scotia Bank, a TD. The best person to get that pre-approval right there is the person on site. They will hold your rate for 36 months, which is 3 years. The rate's not going to be the greatest, I'll be honest with you on that part, because they're going to charge you a very high rate because they'll hold it for so long. But that's not going to tie you that particular banking institution anyway, and you can always reshop it a little bit later on.
Okay, and what costs can be expected on closing?
Well, you got to remember with condos, there's going to be 2 closings. People don't realize this when they buy it, but you have 2 closings. You're going to have your occupancy date, which means it's ready, you can move in, and you can actually live there while they finish the rest of the building. So you're going to have to pay your last portion of your deposit. You're going to have to pay all your hookup fees, so hydro fee, your water, telephone, cable. You have to pay all those fees, but typically you want to make sure that the builder itself will cap so a certain amount for your unit. Because if there's no cap, it could be tens of thousands of dollars. So you want to make sure that your builder is willing to cap that for you.
Wow, yeah, absolutely. Okay? And when does the mortgage actually take effect then?
Well, the mortgage doesn't take effect till after occupancy. What happens is you have an occupancy period where you're going to be paying the builder basically rent. We call it a phantom mortgage. So that could last in between 60 days up to a year before the actual condo corporation gets registered, and that's when you actually take your mortgage into account and start paying your own mortgage off. So what'll happen on the occupancy date, the builder will ask you for 12 post-date checks that are equivalent to an interest rate that they set for you. Could be 3, 4, or 5% from the amount of deposit to your purchase price minus your deposit, plus you have your taxes and your condo fees. So it might be $1,500 or $1,600 or $1,700 a month you're going to pay rent until it actually gets registered, and then your mortgage will actually take over.
Wow. Okay. Thank you.
You're
a lot
very
of
welcome.
information there. Thank you, Roy.
You're welcome.
Thank you for watching this week's Mortgage Minute. For more information, visit our website at YourMortgageYourWay.ca, where you can find links to all our social media. Sign up to our blog, follow us on Twitter, like us on Facebook, or subscribe to this YouTube channel to get helpful advice on what's important to you and your family's financial health.